the stock market equities depreciated 0.09%. The Nigerian exchange market closed on a negative note amid sell-offs and buy interest as the benchmark all-share index depreciated by 9 basis points. The Nigerian exchange all-share index closed at 41,975.45 points to reflect a decline of 0.09% from the previous trading day and a year-to-date return of 4.23%. Meanwhile, the market capitalization decreased by 19.8 billion naira at the close of market yesterday, Wednesday, 3rd November 2021. The stock exchange market value stood at 21.9 trillion naira from 21.9 trillion naira in the previous trading day. The market breadth closed negative as Univincial led 13 gainers and 20 losers, topped by Lasako at the end of the day's session. Now, the stock market has advanced 1,704.73 basis points since the start of the year. To further analyze what went down at the market yesterday is Ambrose Omodio, our in-house stock market analyst. Pleasure having you, Ambrose.
Yeah, thanks for having me.
So let's explore yesterday's trading and what to expect today.
Yeah, looking at the 1 point in the market yesterday, actually we see some movement in the market. It's not far-fetched from investors taking profit. And anywhere in the world, profit taking is part and parcel of the market. That means when stock are rising in time, investors will take their profit and also move to another investment or invest in another stock. What we saw yesterday for me is in order. I think that the market is also stable. The good thing is that the volume that brought the market here have not gone out of the market, because what we are seeing for the last 3 trading days has been, a low traded volume compared to the volume that moved the market to this level. That means any investor in this market that understand the market dynamics should not be panicking seeing this kind of seesaw movement in the market. And also, don't forget that the NEC just was concluded last week when all the 10 quarters were made available to the market, and this number beat expectation. For me, institutional investors and other market players are taking their time to analyze these earnings that were released to the market last week, for them to start reporting their portfolio for the end of the year, seasonality, and the new year 2022. That means, as an investor taking position between now and end of the year, we might see all this up and down movement in the market. That doesn't mean that the market is not there. The momentum in the market is still okay. Apart from that, the money flow index is still looking down, showing that people are taking profit already in the market. For me, the market is still healthy and strong. But today, as you don't ask, for me, I see also a mixed market today, because investors also look at that. Where are we going to put them on? Because the pullback and still opportunity for them to buy at a low price. That means those companies that has good value, that are selling at a discount, that the margin of safety is high, it's more attraction for the designing investor to know where to put their money for the end of the year, especially those that are invested for dividends. Now that they have seen the third quarter earnings report of many companies, it has given them an insight what is likely to happen at the end of the financial year 2021. For that, positioning ahead of the financial year is the right investment decision to do, which I believe after due diligence on this result that are into the market, you see investors will go for slow reshuffling, going from one stock to another, positioning for what? For good dividend. Especially now that the numbers of this company have shown that the possibility of them doing their dividend for the financial year that will end 21 December is going to be better. For that, investors are even more happy because most of the stocks they want to take position are selling at a discount. For me, the market is still in order. That means there's no panic in the market as we speak now. Also, looking at what is happening in the fixed income market, as we speak now, there's no direction where the yields are going. Until it becomes clear, there will also be investors with them to see where it also moves their fund. And don't forget that in equity investment for financial market generally, the what we call secular flow of funds. That secular flow of funds means that investor or money looking for where there's what higher returns. If the return to fixed income is not too attractive because of inflation, some may likely leave that investment window and move to equity space to see where they can edge against inflation and also get a better dividend yield at the end of the financial year.
All right, thank you, Ambrose. Do have a splendid day. Thank you for the updates from the stock market.